Hello everyone and welcome to today's Morning Report. Charts prices on Tuesday 18th of July with me, Rich Perry, market analyst at Handtech Markets. We've got a sort of dollar corrective day going on. The dollar has come under fairly significant pressure actually on the back of a couple of things really in the last 2 days really, or two sessions. The sort of announcement on Friday that inflation and retail sales were negative or worse than expected. And that sort of really does feed into doubts in the markets having over the Fed, whether the Fed can actually sort of push ahead with continued rate hikes in the light of disappointing inflation data, and that has really put pressure on the dollar. Let me just show you the dollar index, which is continuing to fall away sharply on Friday. Bit of a consolidation yesterday, but again this morning, and we're down today on the back of political side as well. So you got not only the monetary policy side of it, but also the political side of it, whereby suggestions are that Congress are not going to put through, be able to vote through the Trump repeal of the healthcare, Obama healthcare, sort of the changes that he wants to make to that. And if they can't do that, then how can he actually get through his fiscal plans? So it's going to be really difficult for Trump going forward, and the market is has been or the dollar's come under pressure on the back of that. In terms of your treasury yields, mildly lower, nothing too significant, but mainly we're seeing the dollar weakness on the back of that Congress news there. Now, in terms of your markets board, dollar weak across the board, apart from sterling. Now, sterling has come under pressure after UK inflation data came out just earlier, and was surprisingly down 2.4% on the core CPI, down from 2.6, expected to be flat, and the headline down from 2.9, expected to be flat at 2.9, down to 2.6. So really surprisingly sort of low inflation data. I say low, still very high considering wages are growing at around about 2%. But still, inflation is still falling away, and that sort of relieves some of the pressure on the Bank of England, which Bank of England has recently suggested high inflation could lead to rate hikes. So subsequently, the sterling has come under pressure today. In terms of your equity markets, sort of mixed really. FTSE 100 sort of outperforming on that sterling weakness. But generally speaking, markets are fairly sort of sentiment-wise a little bit uncertain. S&P 500 basically flat on the day yesterday, and also little real move on the day either in terms of daily range. So very much of an uncertain trading session there. But generally speaking, equities are sort of in the European on the European side of the equation a little bit more corrective. Certainly, the Wall Street markets continue to outperform. So, what have we got to look forward to today? Well, we've, as I said, we've just had out the UK inflation data. We've got German ZEW imminently, and that's expected just to come back slightly. If I can get my crosshair, come back slightly to 18 from 18.6. Now, that would still be a pretty positive number, though, wouldn't it? But it would still be a second month of decline. But yeah, still a positive number, I think. There, NAHB Housing Market Index is the only real US data this afternoon, staying at 67. So that takes me to my chart today, which is the Aussie dollar, and what a huge breakout we have seen on the Aussie. That move above 78.35, that's the green line there. That is the highest we've seen the Aussie since May 2000. Is it May? Yeah, May 2015. Incredible breakout on that dollar weakness. And also look at the RSI, 77. We haven't seen that since I think 2013. Incredible. November 2013 was the last time we saw the RSI at these sort of levels. Now, obviously, that shows strength of trend, strength of breakout, yes, but also leads you to a little bit of caution because it's so stretched. Now, the market, you would say, is certainly another strong bull candle today. But just be careful because the market did think about a corrective move yesterday at that resistance. It did initially sort of roll over, and the RSI sort of flirted with that 70 level again. But obviously today's strong bull candle has sort of driven that move. But that came on sort of news last night of that Congress sort of development. Will it sustain this move higher? I think this is on US political risk for Trump not being able to get stuff done. Whether it sort of continues to drive the Aussie higher, a little bit uncertain about that. Let me just show you the Bollinger Bands. Bollinger Bands, you sort of traded entirely outside the Bollingers yesterday, and you again sharply through that today. It's getting a bit stretched. I'm a little bit sort of umming and ahhing as to whether this is a good one to chase. I think it's a little bit sort of getting towards a sort of exponential time. I mean, yesterday did threaten that correction and could easily have started to correct had we not had that sort of political development out. So yeah, I'm a little bit cautious, certainly with the RSI at 77. And if you start to see that rolling over and falling back below 60, below 70, that would be your sell signal, profit taking signal certainly. Now 78.35 is arguably initial breakout support. Certainly on the hourly chart that is the case, with that being a level of resistance that was holding throughout yesterday, but then broke overnight. So that's your initial basis of support. But certainly, I think a correction would set in below 77.82, which was today's low, really. Yeah, I'd just be very cautious about chasing this one too far higher, given how stretched it is. So I wish you good luck in your trading today, and I will speak to you later. Thank you.